everyone, welcome back to Corporate Decoder, the place where we unravel corporate secrets so you don't have to. Today we're diving into the first quarter report of HCW Biologics, and let me tell you, it's a bit of a roller coaster. It's like watching a startup try to assemble an IKEA bookshelf without the instructions. Will they succeed? Let's find out too before we start. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss all things finance and business. This report is basically a play-by-play of a company trying to stay afloat, navigate legal troubles, and convince investors they're worth the risk. There are reverse stock splits, debt conversions, and a whole lot of legal drama. Buckle up, it's going to be a bumpy ride. HCW Biologics is a biopharmaceutical company that's trying to develop new treatments that help people live longer and healthier lives, focusing on fighting age-related diseases. They believe the main culprit is chronic inflammation, so they are working on immunotherapies to combat this. Think of it as trying to put out the small fires in your body that cause bigger problems down the road. This report covers their financial activity up to March 31, 2025. Keep in mind it's an interim report, so it doesn't have all the details you'd see in a full annual report. They had a reverse stock split, which basically means they took every 40 shares of stock and turned it into one. This doesn't change the company's value, but it does make the stock price look higher. Companies often do this to avoid being delisted from the stock exchange. Navigating Nasdaq compliance looks to be a key concern for HCW Biologics. Here's where things get real. The report says there is substantial doubt about our ability to continue as a going concern. In simple terms, there's a big question mark over whether they can stay in business for the next year. They have a loan with Cogent Bank to purchase a property for manufacturing facilities. However, some subcontractors have filed liens, meaning they haven't been paid for their work. If they don't pay these bills, the bank could declare a default and demand immediate repayment. That could be a very bad outcome. Let's look at the numbers. The balance sheet shows some concerning trends. As of March 31, 2025, they only had $1.1 million in cash compared to nearly $4.7 million for their accounts payable or bills they need to pay. Remain very high at $19.7 million for. The income statement reveals a net loss of $2.2 million for the 3 months ended March 31, 2025. That's better than the $7.5 million loss they reported for the same period last year. This may seem like a positive direction, but it must also be considered alongside other financial metrics. Their revenue has also plummeted dramatically, from over $1 million to almost nothing. They lost approximately 99% of their income, so they are highly unlikely to recoup this loss. Research and development costs also decreased by about 30%, which could indicate that their efforts to innovate and develop new products are slowing down. Their weighted average shares outstanding significantly increased to 44.7 million from only 37.2 million during the same period last year. The statement of cash flows is also alarming. HCW Biologics is using more cash than it's bringing in. There's $3.5 million used in operations this period, and it is not sustainable in the long run. They raised some cash by selling stock, but it wasn't enough to offset the losses. In fact, it only provided a small amount. They are also paying interest on their debts, adding to the financial strain. That's roughly $250,000 in cash paid for interest, which can be considered quite alarming. The accrued capital expenditures were zero. Okay, that covers the key financial statements. HCW Biologics was incorporated in Delaware in 2018. As a reminder, they did a reverse stock split effective in April to boost their stock price and meet Nasdaq requirements. Every 40 shares became 1 share. Also, key people who had loaned the company money agreed to convert that debt into stock. A major expense in the past has been legal fees. They've been fighting a legal battle, which involved the company's founder. The good news is that there has been a settlement. However, they still need to account for all these legal costs from this battle. Now, there is another potential lawsuit to deal with. I've made some changes with another company related to some licensing agreement they have together to try and maintain the agreement. They rent office space in Florida. They operate as one business segment. They do not have significant international operations. Their loss per share is AOE.05. The company's board of directors consists of Gary, Rick, Scott, and Hing. Their outstanding debt totals over $13 million and is primarily split between the Cogent Bank loan for facility construction and private secured notes. They are committed to providing clinical grade materials that are under contract at over $1,200. They don't expect to receive a tax benefit from their losses. They had a huge loss as a result of a settlement agreement, but are currently working through ways to improve. Some secured notes were released in February. HCW Biologics will have to estimate future earnings. The company lists long-term investments for about $1.6 million. As of December 31, 2024, there was no goodwill. In 2025, they paid $2,442.2699 for interest. They saw an increase to prepaid expenses. The shareholders' equity is negative. They only have one segment. No information to report here. Now, putting all of this together, HCW Biologics is in a precarious situation. They are burning through cash. Their revenues are way down and they're facing legal challenges. On the other hand, it looks like their management is doing what they can to get back on track by restructuring debts, reducing costs, and they're working hard to secure additional funding. Their biggest challenge right now is turning their research into revenue. They need to get their lead product candidates through clinical trials and onto the market. They also need to resolve their financial issues and regain compliance with NASDAQ listing requirements. This is crucial for their survival. If they can achieve any of the previous things, a possible target would be to trade at $30 latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.